Hello, good afternoon. Welcome to day 42 of our this rule-based 60-day rule-based trading challenge. And today was a very smooth sailing day. And needless to say, we had a good profits for the day. It was not much of a challenges today, and market was kind of constantly or steadily moving in the bullish side, and there was not much of a threat happened or a challenges occurred during the day. So however, we'll just quickly walk through the uh, trading details for the day. Only challenge I would say was, it's not a challenge, a minor pointers, like the VIX was not in our favor. VIX was started going up after we sold our we took the trade. And normally for an option seller, that is not a desirable situation. But still, since the trend was in completely in our favor, we had a great day, I would say. So we could identify the bullish trend right at 9:30. There was no confusion, or it was very pretty clear. Generally, some of the days we have some data trend in one direction, and the data points in the other direction. So there was no such occurrence today. So it was very clear. So we just sold the 24,500 put of the current week, and we covered it as we entered the trade at 9:30, and then we sold it at 105.5, and then we could cover it at the day end at 77.90. If you look at the premium chart on the left side, which is there in this screen, is the premium chart. We entered at 105.5, but there's a price, and then that is at 9:30. This is the candle which we sold, and as you see, throughout the day, the price never went above our entered price. That which means throughout the day we were seeing a green P&L for the day. And we had just wanted to mention on the stop loss criteria. One stop loss, as I've been always saying, is the 50% of the entry price. The other one is which is not occurred anytime, but the other point is we need to also we maintain is the option ORB, that is option opening range based. Like for the Nifty, we take the 920 to 9 onwards the ORB, but for the option, we take the very first candle itself, 915 candle itself. So 915 candle high, as you see here, is 139.80. That means around 140 rupees. So we kept 140 rupees as the trailing stop loss. Whichever is the favorable, or whichever is more meaningful, that is a stop loss which we keep it. If the candle is too small here, and in that is the if that is the case, and if the stop loss becoming less than 35%, like we generally want to keep a distance of at least 35%, so then we choose the 50% level, or the higher the stop loss level. Otherwise, we take the ORB. Today, since it was a bit longer candle, we could take the from our entry level. If I look at it, it was reasonably pretty high. So we had kept the 140 rupees as the stop loss. So this is something which input I just wanted to provide. And but anyway, these are not relevant for the day, because neither the entry stop loss nor the ORB stop loss nor even the trailing stop loss got triggered. So it was just for the reference I have mentioned here. So the entry price is 105.9, and then we, since till 130, this is the 130 candle. So till then the trade remained in profit. So hence we started tracking the trailing stop loss, that is based on the day low. So it could be as every low it makes, we just try to capture the day low, and then add 50% to that. And the last trailing stop loss was based on this candle, which is 225 candle, and then the low was 67.75, and hence accordingly the trailing stop loss was 101.60. But nevertheless, none of the stop losses got triggered, and then at the end of the day at 3:15 we exited at 77.90. What favored us for the day is like this is on the right side. What you see the chart is the Nifty chart. The Nifty chart. This is the rectangle. Whatever I marked is the our entry. Sorry, this is one candle before that. Actually, I should say. So okay, that's okay. So the 9:30 opening candle is this is the candle where we took the entry, and after that you see it was a smoothly it was just moving up, and it was never although it started becoming sideway market from 11:45 onwards, or maybe from here itself I would say. So say around 10:50 or 11 o'clock onwards, it was a sideways. But this uptrend helped us. See, if you look at the VIX was not in our favor. This is the entry candle, reference candle here, and then after that the VIX was going up. And had the VIX like yesterday, if it was falling after our entry, we would have got much more profits for the day. Since the VIX was not in our favor, it is only purely based on the time decay and the trend based, that is intrinsic value based, the benefit we got. And still I would say it was a good profits to book for the day. So this looking at the trading journal, that is like we sold 24,500 put and at 105.5, and we covered that at 77.90, and then we incurred a trading cost of around 61 rupees. So we all in all we made a profit of around 2,009 rupees for the day. With this, we again reached another peak in terms of the P&L level. So as you see, the equity curve is at the highest level now with the fourth consecutive profit it is making. So we are now in a very comfortable position of 16.92%. Again, P&L is not the criteria which I never want to emphasize on the P&L, but on the process itself. And as I've been saying the earlier also, multiple times we hit the fourth consecutive wins, and then invariably we are not able to cross more than four consecutive wins. So we need to be careful or watchful on the Monday. It is not that we will be biased, but statistically it has shown that it has not crossed the four consecutive wins. So no action is being taken. It will be definitely will be back of the mind when we take the trade on Monday. So that's all for the day, and thanks for your continued support. See you on Monday for the 43rd day of this trading challenge. Thank you for your continued support. Have a great weekend. Have a great day. Bye bye. Take care.